Welcome, everybody. I hope you guys have been awesome. You're listening to Leon Tsepo Mashalani. Today's episode, we're going to be talking about exactly what is a trend and how to basically just interpret price in a way that makes sense, right? So today, we're going to dissect and actually look into what actually constitutes a proper trend and what actually defines a real trend. So I do apologize that I actually took this long to upload episode 6. I just had a very long weekend and woke up with a flu. It's been a mess. At least my voice is a bit better now. But yeah, so without wasting any more of your time, let's get to the task at hand. So today I actually have something even nicer for you guys, and that is the best broker that I can recommend to you guys at the moment, which is Exness. They have amazing spreads, super tight spreads, fantastic trade executions. And if you are interested in trading with a reliable broker that is regulated in South Africa and basically majority of the nations worldwide, Exness is the broker to be with. So if you are in South Africa and you're a bit skeptic with which broker to choose, because we've been having a problem with brokers, I'm not going to dwell into that, but if you want a reliable broker, here are the guys right now. I'm going to leave the link to register on the description of this video so that you can get taken care of. So let's get to today's topic, right? So the question then now becomes, what is a trend, right? There's no mystery behind what a trend is. There's nothing major about it. We all know that a trend can either be a downtrend, can be a sideways trend, it can be an uptrend, right? So these are basically the main, I may say, the main AKAs of what a trend is. So we have a bearish trend, which indicates a downtrend, sideways trend, which is known as a consolidation. We have an uptrend, which is known as a bullish trend, right? So a trend is a direction the market is moving in, right? It's basically the direction the market is gonna move in or is moving in, right? So it can either be moving downward, sideways, or upward, right? And everybody seems to have some idea on how to pin out a proper trend, right? So I'm gonna merge everything that I've taught you so far into one, I would say, strategy. I don't like using the word, but one method that makes sense, right? So every single time you'd hear about a trend, you'll basically see people talking about trend lines. And in this context, I'm not here to teach you how to plot the perfect trend line. I'm not here to do that. I'm not saying it's wrong. I just want you to actually know what truly constitutes a proper trend, right? Because in this instance, somebody will put a fancy line and in the hopes that price will bounce from it and move, and in actual reality, majority of the time this doesn't pin out properly, because there's different kinds of trends, right? And this type of marking out a trend is actually a bit subjective to certain things, right? But I want you guys to actually understand what truly is a trend. Okay, we're gonna define what a trend is, and I don't want you guys to look at trends through the lens of trend lines. Okay, there's nothing wrong with it. There's nothing wrong with trend lines, but remember what we do in trading. In trading, we basically analyze in price. So for me specifically, if nothing can correlate with what's happening with price, I tend to run away from, right? Because when you look at a trend line, it doesn't tell you anything about price levels, right? Which is why I normally recommend that you first understand what a trend is before you can even use things like trend lines. Pardon me. So let's get here, right? We did make mention that a trend can be constituted by three outcomes. Can be an uptrend, a sideways trend, or a downtrend, right? We're first going to talk about the uptrend, right? Now, an uptrend is a series of highs. Okay, it's a series of highs, mainly a higher high or a higher low. Okay, this is what we call market structure. Every single time I'm talking about market structure, I'm basically talking about a trend. Yeah, and it's a trend that can easily be related to price, right? All of this is going to make sense once we hit the charts. Okay, everything's going to make sense once we hit the charts. But an uptrend is a series of highs, mainly higher highs and higher lows. What do we mean? Every single time you analyze or try to identify a trend, you have to identify this zigzag type of structure. This is what constitutes a trend. It moves in this way. It moves in this manner. Pardon. Right? This is what basically be happening with price every single time it's trending. Right? Especially to the upside, this is the kind of structure we'll get. A series of higher highs, higher low, higher high, higher low, higher high, higher low. It has to be in this form. Right? Price will move to create a higher high. After, it has to create a higher low. After a higher low, it has to create a higher high. Now, what do all these mean? As the name suggests, a higher high is a high higher than the previous one. Right? This is a high that is higher than the previous high, hence the term higher high. Okay, and a higher low, it is a low, right? It is a low, but on the uptrend, right? It is the term higher low simply means this is a low that is higher than the previous low. Yeah? I'm sure this is very straight to the point. A higher high is a high that is higher than the previous high. Right? In other words, the next higher high has to be higher than the previous higher high. A higher low is a low that is higher than the previous low. Higher low. Higher high. Yeah? Pardon me, guys, I have a serious flu at the moment. I just decided to record this because I felt a bit better, so just take advantage of that. So let's get to dissecting this very slowly. Okay? Higher high, higher low. After this higher low, price has to create a high that is higher than the previous high. Hence, you will see that price will normally just move to the upside in a manner of the sort. Why? This high is higher than this high. That's what constitutes a high structure, right? It has to be higher than the previous high. So once price has moved beyond the previous high, it has to create a higher low. A low higher than the previous low. Price should not trade. Let me use this. Price should not trade below the higher low. In other words, it's no longer a higher low. Why? It is not higher than the previous low. So it is no longer constituted as a higher low if this so happens. Right? I'm pretty sure this is very straight to the point. Right? But it has to be higher than the previous low. In other words, it has to be right there. Higher, low. After a higher low, we need to see what? You mark this, and you need to see price trade above the previous high, indicating what? A new higher high. This is what will justify proper trend. Okay? And reason why I said I don't want you guys at the moment to focus on trend lines is because trend lines don't tell stories about price levels. Remember, on our right side there's always price. Right? I need something that will tell me something about price. Right? But with this high, you can mark out that, okay, price reached, I don't know if you're trading Nasdaq, $15,000 level or something of the sort. You know, there's a story behind it. There's a way of interpreting it that in a way that makes sense. Right? Even, I'm sure you guys watch, these news channels, whereby you'll be hearing somebody, Nasdaq crossed such and such and such a level. We are anticipating that it's gonna move to such and such and such price, right? And you hardly hear these people talking about trend lines, right? It's because they have no relations whatsoever to price, right? So these are things that you need to understand as an individual while you're trading, right? So remember what I said, here's a price chart. Instead of looking at price through this lens, because it is not telling you about the story of price that is happening, rather you ignore that at the current moment. I'm not saying it doesn't work. I'm just saying to you, first understand how structure is formed before you can commit yourself to anything else. Okay? Now, let's look at this from a chart's perspective. Right? Structure is always created. Higher high, higher low. Higher high, higher low, higher high. You get the picture, right? I mismarked that. What is that thing? Erase everything, right? Higher high, higher low, higher high, higher low, higher high. You get the picture, right? This is how price simply moves. Now I'm gonna give you in-depth information on how you can actually take this and simply just grow yourself as a trader, right? You see what I was telling you about? Price has created a high that is higher than the previous one, right? Same thing here. This high is higher than the previous one, right? Same thing, high, higher than the previous one. Same thing, a high that is higher than the previous one. So this is basically what we then consider as market structure, or this is what we basically consider as a trend. Now, they always have to be in series. Higher high, after a higher high, there has to be a higher low. After a higher low, there has to be a higher high, and so forth and so forth. Right? As we can see here, we have a higher low, a low, higher high, and then a higher low. A low that is higher than the previous low, a low higher than the previous low, a low higher than the previous one, and so forth and so forth. Right? They have, when you connect them, to form the zigzag structure. Then you know that you have identified proper market structure, and then this is what we consider as a trend. This is what we consider as a trend, and not this. Right? Now you can relate price with your trend. Yeah? I'm sure it's very straight to the point. Right? So it's the same thing also with the downtrend. It's the same thing with the downtrend. Okay? A downtrend, pardon me, I made a mistake. A downtrend is a series of lows, mainly a lower low and lower highs. Lower lows and lower highs. What does this mean? It simply means when you move to the upside, price creates highs. But when you move to the downside, it creates lows. Right? And each trend has its own characteristics. The uptrend has higher highs and higher lows. The downtrend has lower lows and lower highs. You can interpret it the same way as you did with the uptrend. So price creates a low, right? Which is then described as a low lower than the previous low. A low lower than the previous low. Right? Even with lower highs, it's a low, it's a high that is lower than the previous one. Right? Here is a high, here is another high, but this high is lower than the previous one. Right? Can see that it's lower than the previous one, hence the term lower low. Now this then now describes what we then know as a downtrend, right? Not trend line, but market structure. If you genuinely want to learn more about trend lines, first, please, I beg, first understand market structure. Because once you understand market structure, everything else is just a walk in the park. Okay? And I'm not even gonna beat about the bush with this. Same thing. Lower low, lower high. Lower low, lower high. Why is this a lower low? Because it's a low that is lower than the previous low. Why is this a higher high? A higher low, pardon me. Why is this a higher low? Because it's a low that is lower than the previous low. Right? After that, there has to be a lower low and a lower high. Lower low, lower high. Lower low, lower high. Right? Now I'm going to make you understand the term that is the famous Forex term that says you buy low because price is going to move higher, and you sell high. You felt this is where that comes from. You have to understand where these things come from. In other words, you sell at your lower highs. Why? Because you want to catch price as it moves to create the next lower low. Same thing, you don't buy this, you let it be. When price gets here, you sell. Same thing, you don't buy, you wait for price, you sell. See, all your positions are all in profits. Right? Sell. This is what you keep on doing. You sell high. okay? And you buy low. It's the same thing. It is literally the same thing. You buy low. You buy, price moves up, pulls back, you buy, price moves up, moves back, you buy, and so forth and so forth. These are the points. Those are the points of interest. Hence the famous term of buying low and selling high. In other words, on an uptrend, you don't have selling positions. In other words, you don't sell these. You don't sell these. You leave these alone. You don't sell the highs. You don't sell from here simply because you are looking at this move. It's a short move and it's against the trend. Hence, we always tell you that follow the trend. When you say follow the trend, we are basically just saying move along with market structure. If market structure is moving to the upside, rather have buy positions or bullish positions rather than having opposite counter trend positions. In other words, positions that are against the trend. Because let me make a quick example, right? Let's say you do sell here, right? And yeah, you do see yourself in some profits, but remember, we're on an uptrend. Price is moving to the upside. Price is moving to the upside, right? And so you have your sell positions there. You're in profit, yes, but then this happens. Now you're holding a negative. And then you tell yourself, it's going to come back, but you start selling again. Price moves down. Yeah, I told you it's going to come back. And then keeps on going back against you. Why? You are counter the trend. You are doing what? You are not basically buying, selling high. This is not what we mean by sell high and buy low. This is not what we mean. You buy low in an uptrend. You sell high on a downtrend. I repeat, you buy low on an uptrend and then you sell high on a downtrend. So refrain from having buy positions on a downtrend and refrain from having sell positions on an uptrend. You buy low, you sell high. Sell high, you sell here. Because even if it so happens that you missed your entry, right? Your entry wasn't perfect, but for the mere fact that you identify that I'm on a downtrend, let's say you entered early, you sold, right? But price kind of had a deep retracement. But sooner or later, it's going to be in your favor. Because of what? You are in the proper direction, right? It's going to be in your favor sooner or later. That's when now you can be sitting there that, it's going to come back. Why? You have the confidence of saying that because you know that you are not against the trend. Always move with the trend. You buy on an uptrend, you sell on a downtrend. This is not a trend. This is not an uptrend. Simply because you're seeing that price is kind of moving to the upside in Yana. It's not an uptrend. Okay? Now, these are the two waves that make up a trend. We have an impulse wave and a corrective wave. Now, an impulse wave, this is a wave. This wave is always in the direction of the market. It's always in the direction of the trend. It's always moving along with market structure. In other words, if price is moving to the upside, if price, let me say to the downside in this case so that I can use this chart. If price is moving to the downside as we see here, this is going to be the impulse wave. This is going to be the corrective wave. The impulse wave is always longer. It's always longer than the corrective wave. Okay? It is always longest. This is where you enter. You don't enter on the corrective wave. What is the corrective wave? These are the corrective waves. These are the corrective waves. But you enter on the impulse wave. the impulsive waves, which are always in the direction of the trend. Now, remember, even yourself, when you're breathing, you inhale and exhale. You inhale and exhale. You don't just keep on exhaling. You have a break point whereby you have to inhale or exhale. The market moves the same way. So if it's exhaling here, it has to inhale. Exhale, inhale. So these are basically just resting points. Every single time there's a corrective wave, you know that okay, the market is resting a bit. It's inhaling, right? This wave is always counter the trend, but is always shorter than the impulsive wave. So this is basically where the market is just taking a breather. It doesn't just move in one straight line. These are breathers. These are what we call corrective waves. Guys, flu. Right? So, very simple. Impulse, correction. Impulse, correction. Impulse, correction. And so forth, and so forth, and so forth. Right? If you're on a downtrend, you sell the impulse waves. You don't buy the corrective waves. So we basically don't trade the corrective waves. Why? The corrective waves are always in the opposite direction of the trend, so you run away from these. Even in an uptrend, it's always the same thing. Okay? You run away from the corrective waves. You don't sell. But what you do instead, you buy the impulsive waves and so forth. So you buy low, you sell high. Okay? So on the next episode, we're going to be basically talking about the two types of trends. Now I'm not talking about bullish or bearish. That's not what I'm going to be talking about. So since ever we now understand the difference between a bullish trend and a bearish trend, now we have to dissect what is basically known as the two types of trends, right? There's two types of trends. So simply because now you understand market structure does not mean you approach each trend at, you just blindly enter the market, right? There's two types of trends that you need to understand. I'm just going to give you spoilers. We have a steep trend and we have a smooth trend. These trends are what we're going to be talking about in the next episode. So be sure that you are subscribed to the channel, like the video, click the notification bell just to let me know what you think. And yeah, don't forget, if you want to register with a reliable broker, I'm going to leave the link in the description of the video so that you can do that. So once you have registered that account with that particular link, that's my partner link. So if you have done that and you want more information about trading, trading sessions and all of that, just register with the broker, and then let me know in the comment section that you have already done that, and then I'm going to send you details about how you can have those trading sessions with me. That's basically that. So be sure you take advantage of that. There's no payments of any sort. Everything that we offer on this channel is absolutely free. And I almost forgot, everything that is offered on this channel is not financial advice of any kind. It is just educational purposes. Peace out. It is your boy Leon Tepo Mashalani, the Lord's Lion.